Money FM 89.3, Singapore's most influential radio station.
Good morning. This is your finance news with me, Ryan Huang.
I'm Michelle Martin. Good morning.
Good morning. I'm Adrian Abraham.
I'm Clarissa Montero for the Workday Afternoon.
This is Prime Time on Money FM 89.3.
I'm Rachel Kelly.
Tuesday was a good day for markets. Weekend mornings here on Money FM. Glenn Van Zutten with you.
Money FM 89.3.
Hello, I'm Rachel Kelly, and welcome to this special Money Matters session, ESG and Sustainability Investing 101. Now, for those of you who aren't familiar with me, you'll usually find me on Prime Time on Money FM 89.3, Monday to Friday, 4 to 7 p.m. And every week on Prime Time, we have a segment called Eco Money, where we focus on sustainability investing and finance. And that segment's been running for about a year now. And over the course of the last year, we've realized that although we cover topics such as ESG investing, sustainability investing, green bonds, green loans, regulatory announcements, what's happening on the scene here in Singapore, quite a few of our listeners are interested to find out more about the fundamentals, or I guess you could call it, as this session is titled, a 101, the basics of what exactly we mean by sustainability investing. What does ESG mean? What are some of these terms that are thrown out there like greenwashing? So that's led to us launching this segment today, which is ESG 101, where we'll go through some of those terms. And next week, next Wednesday at noon, we'll have another session that will take a deeper dive into some of the products that are out there on the market that you would want to be familiar with. Now, over the course of this session, while we'll be answering some of those questions, we will also be giving away, we have 2 sets of hydroponic mini gardens to give away during today's session. So pop your questions into the comment box. Halfway through the session, I will announce one winner, and I'll announce another one at the end of this session as well. So best question wins. So don't forget to get typing. Now, we'll answer as many of those questions as we can during the session as well. But for those questions that we can't quite get to, we'll hit those after the session's concluded. We'll respond as best we can on Facebook as well. Okay, so to start off today's session, I want to ask all of you a question, and that is, do you think ESG investing equates to higher average returns? Yes or no? Answer in the comments box, and we'll see what your responses are there. We've got quite a few responses coming in as well, I see, and some questions already. Fantastic. Great. Ash says yes. Okay, Ash, well, we'll find out more. But so to get started, without further ado, it's now my absolute pleasure to invite and welcome our very special guest to join us today. I'd like to welcome Samuel Rhee, and he's the Chairman and Chief Investment Officer of Endowus. Now, as Endowus's Chief Investment Officer, Sam heads the investment committee and ensures holistic portfolios for every investor, including the ESG, Endowus ESG portfolios. He's also the former CEO and CIO of Morgan Stanley Investment Management in Asia, and he has over 27 years, almost 3 decades of institutional investment experience in Singapore, Hong Kong, and London. So Sam, thank you once again for joining us today and taking the time to share all of your wonderful insights with our listeners.
Hi, Rachel, and hi, everybody. It's wonderful to be here today.
It's always good to get chatting with you, Sam. And I know we had you on Eco Money a few weeks ago to talk about ESG trends, didn't we?
That's right. It was, I think it was just after we launched the ESG portfolios on the Endowus platform. So that was great fun. And hopefully today's session will be very helpful to people who are getting interested in ESG, and we can help them get going.
That's what we hope to do, Sam. So let's kick off then. Let's start off with that basic question. What do you mean by ESG?
Yeah, I mean, ESG is an acronym, obviously, that stands for environmental, social, and governance. And these are 3 of the biggest areas where I think the financial markets and financial institutions are focused on, where money can actually make a difference. So I think traditionally it began with governance, which was, companies actually exercising their vote to influence companies to act better.
Right.
And then kind of evolved into other areas where, companies can make a impact on the environment and on society. And if you invest in the right companies that are either improving in these areas or are, providing best practices, it can lead to better returns. And to your question, I also am a yes to that question. And that's why I think ESG is becoming a much more important space.
And so far, we've only got yeses on our comments board.
Really?
So look, the majority of our listeners agree with you. But Sam, quite often I get asked, environmental, social, and corporate governance, these are very broad terms. Perhaps you can share with us, how do you describe them in relation to sustainability investing? How do you hone in on these terms? Because often with sustainability, it's your own definition of sustainability, isn't it? How do you, or social or environment? So how would you describe them? How do you pin them down when you're talking to your investors?
Yeah, I completely agree with you. It's all about definition, isn't it? And people use these broad terms, and I think for many people it's difficult to grasp because it's so abstract. But if you really boil down to it, it's about governance is about companies acting well, which means that they are actually doing the right things. And if they're doing the right things for consumers, for example, it means that the consumers will be happy with either their product or their service. And therefore, they will win over the customers, and the company will be able to grow by taking market share or become more profitable in the long run, rather than really trying to maximize profit in the short term, which may be okay for a quarter or two, but it will lead to consumers being disheartened or not liking the product, or they will make social impact or environmental impact that leads to fines or penalties. So in the short-term nature of modern capitalism and markets lead to bad practices. And I think it's this whole shift towards longer-term investing, longer-term corporate governance, and those things will eventually impact the society and environment. And if you think about it, look at the brands and look at the services that we use ourselves, like Patagonia, or things that have really resonated with people. Good services and good products in the end win out. And those companies hopefully will take more market share, become more profitable, and they will generate better returns for investors. And I think that's what it's really about. But this whole thing about definition, we call it taxonomy, a fancy word for definitions. And it's a very difficult process. And we'll go into a lot more detail later. I think this is probably not the right time to do it. But when we go into more detail, it does become a very, very complex problem. And so I think the world is moving towards better definitions, and we hopefully will improve over time.
And Sam, while you say the world is moving towards better definitions, I mean, terms like climate change, sustainability, carbon trading, they're not new. I mean, these terms have been around for a very long time. I look back to 10 years ago when I first started covering sustainability in finance, and the market was so quiet then. But now I look at my inbox on a daily basis, I can get 5 to 10 releases. It's overwhelming. So why is ESG and sustainability investing gaining so much traction now? Is this purely a result of the pandemic and people want to make a difference? They want to build back better? What's going on?
Yeah, I think it's a little bit of everything, but there is definitely an inflection point that we have now, I believe, passed. So the inflection point has passed, and we are seeing a surge of not only interest, but real solutions that are entering the market where people can exercise influence with their money and capital, so that we can actually improve the environment, climate, society, and governance in corporations. And so that's really important, that we not only want to do things, but we have the tools and the wherewithal to actually implement these ideas. And so it's taken a long time. And as I explained, I think that the whole ESG space began with mostly governance. It's financial institutions just taking action to try to influence companies so they can generate better returns. But we have completely shifted. And I think, the whole COVID crisis over the past 2 years have definitely shifted our mindset, to things that, it's not just about financial or market returns. There are more important things in life than that. And it's about, the broader issues of environment and climate, that is about sustainability and the future of our generation. It's also about society, especially in the US, where we've had major ethnic issues, but more broadly, gender issues and ethnic issues. I think these things have come definitely to the forefront of discussions and debate, and so that's just accelerating the pace of adoption, interest, and also implementation in ESG.
Okay, Sam. So break it down for us in basic terms. I'm an investor. I want to make a difference. I want to invest in a company that says they're sustainable, or a product that's ESG or sustainability related or linked. How exactly would my investment dollar then make a difference?
Yeah, the first thing I would say is that caveat emptor, buyer beware, because there is a lot of faddish products out there. So people are running the exact same fund in the way they used to run it, and then suddenly overnight they rename the fund a sustainable fund, and they brought in some index or some kind of basic analysis of integration and say, wow, we're sustainable now. So I think people have to be careful and do more homework. There are great resources out there, and I'll share a few during my presentation and later, which will provide you with good resources so that you can educate yourself and become more knowledgeable, so that you can be more discerning in finding the right products, finding the solution providers who are actually doing it in the right way and actually making a difference. But also, I think you have to look inward and say, what do I really want? Can I sacrifice returns because I want to make the maximum impact to society and the environment? Then you have to look at impact investing or charitable giving and other areas. If you want to still generate a good profit and make a difference, then that's where I think the core ESG sustainable investing universe actually helps you. So within that space, I think that it's important to, first of all, do your homework, but secondly, understand that companies take time to make changes. So in the past, I think the investing universe was really focused on the best-in-class companies who are already very good in their environmental score or their societal contribution score or their governance score. And it was very few and far between. One of the reasons why it didn't become very big was because there were very few companies that met the benchmark of investing in these best-in-class funds. But what's happening recently is that we've actually been engaging these companies to improve. And the improvement is resulting in better returns. And so this engagement aspect is a new area in investing that will help us generate good returns. And I think people can focus on those areas too.
And Sam, I know that we were going to get into this a little bit later, but I think since we're on the topic, and that is the term of greenwashing, we get a lot of questions that come in and they ask, what exactly do you mean by greenwashing? So perhaps you can share that with us. I mean, this is our ESG 101. So what do we mean by the term greenwashing? We've talked about an abundance of products coming into the market that may not be 100% sustainable or green. Mutton dressed as lamb, I don't know if you want to call it that, but anyway, perhaps you can enlighten us. What exactly do we mean by greenwashing?
Yeah, wonderful question. And it's core to what I've been sharing on, really doing due diligence on ESG and sustainable investing as a whole. You see our screens even now. Money FM has a green logo. You're wearing a green scarf. I have some green leaves behind me. And we project this image of being green. And many investment products and solutions out there project an image of being green, but are they really green in the sense that are they making a real impact in society? Are they making an impact?
Money's green too, right? I mean, these investors want to make more green by going green. So there's two sides of it, but okay, carry on.
Yes, green, yeah. And we'll talk about that, the great title, pun on the title next week as well. But yeah, only the $5 is green in Singapore. Most of money in the US is green. So it's a very US-centric term. But it's really about similar term, it's been borrowed from whitewashing, right? Things that are not nice, you whitewash it into making it look good. So greenwashing is really about making things look and appear as if you are environmentally friendly and you are improving society, or you're very ESG and sustainable focused. But if you dig a little bit deeper into the actual practices of the company, if you dig a little bit deeper into the investment process and the way they invest and the companies they invest in, if, for example, a fund says they're sustainable investing, but they only own, Google, Amazon, Microsoft, and, Facebook, is it really green? Just having Tesla, is that really green? Because, maybe from a EV perspective, it looks green, but where is the electricity coming from? Is it from a coal power plant, which is polluting the ecosystem? How much does the Tesla factory actually generate, in terms of carbon footprint? That's just from the environmental aspect. But looking from the societal aspect, is there gender equality? Is there gender representation in Tesla, the company? Do you have broad representation of ethnic minorities, or is it a white, male-dominated, Elon Musk-dominated company with very poor corporate governance? So you have to look at a company holistically, not just from a single lens or a single angle. And that's what's, I think, really important.
And I'm going to stop you there, Sam, because we've got a great question that's come in from one of our listeners. And this is from Esther. And she said, how do you measure then the impact these companies have on the environment?
Yeah, there's various ways to do it. And I think there's different measures for different asset classes. So in the space of fixed income, and we talk about green bonds, Rachel mentioned that earlier, is a rapidly growing space. And there, the definitions have been very clearly defined. In Europe, there are clear definitions of what a green bond is. And the green bond, the money that has been raised through a green bond, has to be invested in infrastructure or projects that are actually making an impact to the climate, lowering the carbon footprint, or reducing the increase in temperature that is what's driving the climate change. And so those areas, I think, is much easier to define how the companies are making an impact, and they have measurable impact from a carbon footprint perspective for the green bonds. Equities is much more difficult, and that's why the taxonomy or the definition is really important. But now we are seeing a lot of institutions defining this much better. But I think it really depends on the actual money manager or asset manager themselves to define this well. And they have just like a credit scoring system for lending. You have a scoring system for ESG. So you rate companies based on governance, on various measures. You rate companies on gender equality, women representation in the board, and other measures within society. And then you have environmental measures as well. And you could have a composite score, which measures the impact of a company. And so these broad measurements, and other index providers have come up with other measurements as well. So it's becoming much more better defined. And I think we'll continue to improve that as time goes by.
Okay, we've got some wonderful questions here as well from Sabine and Justin, and another question from Esther, but I think we'll answer those after your presentation because they link in with what you're going to be sharing with us, Sam. Okay. Now, just a reminder to everyone tuning in and listening, don't forget to post your questions because we will be giving away 2 hydroponic garden sets. The first one I'm going to announce, the first winner I'm going to announce just after Sam's presentation. So get typing, guys. But without just to carry on, Sam, we will leave you to present.
Okay, wonderful. So I have prepared a short presentation to everybody. I think most people who have joined us probably have heard of Endow Us, which is a fee-only wealth platform. We're famous for being the first and only digital advisor for CPF investing and really helping people prepare for their retirement adequacy and long-term investing. But we're the only platform that manages all of your wealth and in totality, holistically, over a long period of time. So the company's really focused on education and financial literacy as well. That's why we do a lot of outreach programs, including partnerships with great partners like Money FM. We stand on the shoulder of giants. We're not trying to reinvent the wheel. We're not trying to develop some, robo algorithm that's going to beat the market, because we know that's not possible. So we partner with the largest global and local fund managers who combined manage over tens of trillions of assets, and very familiar names that everybody is aware of. As Rachel highlighted, we have two partners, JP Morgan Asset Management, Shireen, Lily, who's the CEO for Schroders, both CEOs at their respective companies, joining us next week for a special session going into a little bit more detail about ESG investment solutions. But this is a type of work we do, partner with these great companies to develop products and solutions that's suitable for Singapore-based investors, that's tax efficient and in Sing dollars. We launched a lot of sustainable products. And as a result, working in partnership with these fund managers, we were able to launch the first retail-ready sustainable ESG portfolios across the risk spectrum. So multi-asset, so it's equities and fixed income, across the risk spectrum, so you can have different allocations of equities and fixed income, multi-manager, and highly efficient. So, I think that when we were launching this, we did a survey of over 1,000 people. And Rachel shared some findings from it, but Singaporean investors resonate very strongly with these themes of ESG. 50% of them resonated most with the environment factor, but you have to include the 43.5%, which replied all of the above, which is the fourth column. So if you combine that, 93.8% of people in Singapore said, environmental factors are very important to me, and likewise with social and governance. But it's not really, the financial service industry is not really meeting the needs because we're not matching this demand that's growing with a supply of good solutions. And so some people are investing in single stocks, some ESG funds, but the vast majority have not really moved on to actually taking action on their beliefs and values. And the pain points that they've raised are, one, greenwashing, which we just touched upon. But the second is a lack of understanding and knowledge. And this is why we feel that education and financial literacy is so important, especially in the space of ESG. And, we really applaud, the efforts that Rachel and the Money FM team have been doing with their regular presentations to the general public and retail audience. But it's also up to us as financial service providers to provide good options and make it available to everybody, because ESG really is, we feel, the next investing megatrend. And we've only just started this trend, and we're scratching the surface, and there's tremendous opportunities for growth. But one thing that really we need to remember is that ESG investing is not about sacrificing returns. In fact, post the COVID period, we've seen tremendous returns being generated by both equities and fixed income portfolios that has actually beaten the benchmark. Now, this does not mean that the past is a reflection of the future and that ESG will continue to massively outperform the benchmark. That is not what this chart is showing. It's just showing that maybe we have hit an inflection point where ESG investing does not need to sacrifice returns. And therefore, we can actually make a difference in society and the environment and yet not sacrifice returns. So we touched upon this, what is ESG investing, but really it's about achieving a triple bottom line, people, planet, but also profit. And this profit is an important piece because ESG investing sits in between the traditional investing, which is purely profit-oriented and maximizing return on their financial returns, and the other extreme, which is philanthropic donations and charitable giving, which is just about social returns. No financial returns are required. So we donate money to charities. We don't expect them to pay us back. And so this broad spectrum of charitable giving all the way to traditional maximizing profit, there is something that we can do in between. And so that space is ESG investing and impact investing, where impact investing would gear towards a little bit more of clearly defined and measurable impact and a much narrower space. So impact investing is very narrow in targeting, for example, the food chain or, a specific environmental criteria or a very specific gender issue and trying to direct capital to that area of impact investing so that we can measure the impact over time. Whereas ESG investing is much more broader and it's really focused across asset classes, taking the benefits of, traditional investing methodologies like diversification and optimizing portfolios, but also having a positive impact so that we are better stewards of the capital and the resources that we have been given. Now, one of the key things that I think the audience should know and should keep abreast of is the efforts being made by the United Nations. They have developed the principles for responsible investment. There are now over 3,000 signatories globally, and these financial institutions combined manage over $100 trillion of assets. And so this broad spectrum of movement towards more responsible investing will continue to drive change. And it really is focused on the UN Sustainable Development Goals, which are the goals that were set by the UN General Assembly back in 2015 as the Millennium Development Goals, and building on top of that. So there are 17 specific goals. And then within that, if you go into the website, you can find out more. And I would encourage people to educate yourself more in this area. It breaks down into more specific targets, which number 169 targets, and with measurable targets to achieve across these 17 goals. And they're targeting by the end of the decade to achieve these goals or make sustainable or meaningful enhancements. So ESG integration is not just about financial returns. It's about being holistic in our approach, because we should not, like historically, it's been really focused on the shareholders, people who own companies through the financial markets, who have reaped the biggest benefits. But ESG integration is about the broader governance and all stakeholders, whether it's employees, the supply chain, the environment, customers as well, and the community that the company is in, and also regulators and society as a whole, so that we can look at this in a much more holistic manner. And Endowus worked with JP Morgan, PIMCO to launch the Climate Bond Fund. So I think it's really up to the financial industry to really think and come up with better solutions for the client base that we try to serve. So Endowus launched the ESG portfolios a few months ago, where we made all of these institutional funds available to the retail share class. Because most of the times, I think this ESG space has been much more a purview of institutional investors, like, for example, GIC or Temasek, who have led that. But we think that the time is now, and these products are available, so individuals can actually start making an impact on the society and environment, and also generate better returns as a result of that. So it is a globally diversified portfolio. So we're not trying to pick and choose. You need to be globally diversified to minimize risk and improve returns. And the opportunity set has been exploding. So we talked about green bonds very briefly earlier, but the growth of the sustainable bond market, especially the green bond market, which is much more better defined, and increasing projects are being launched to fund. So the market for investments traditionally has been much more equities focused, but fixed income has seen tremendous growth. And because of this growing opportunities, we can actually allocate more capital to it. And people ask, how do you actually implement it? So, this flow, I think, gives us a graphic description of what we need to do to be better at investing. So examine, research, analyze, evaluate, and what I shared earlier, engage. So engaging the companies and helping them make better decisions is really important. And then continue to monitor them so that they don't make mistakes or backtrack in their progress is really important. And the final chart I will share is that it really is about better returns and lower risk, because if you do this and invest in the best companies, then over time, it should reduce the risk and the volatility of returns and improve returns for long-term investors. With that, I think I'll hand back to Rachel.
Thanks, Sam. And that answers the question that we'd asked earlier. Do you think ESG investing equates to higher than average returns? So you've tracked that nicely against the benchmark, and going forward, as you said, it's not an indication of where we are going forward at the moment. It just shows that if you're investing in sustainability, I guess it's sustainable and stable to invest in sustainability at the moment. Is that correct? Okay, great. Right. So what I'm going to do now, just having a look at these questions, we've got some wonderful questions that have come in. Thank you so much, everybody. So we're going to award our first winner, Sam.
Wow.
And I think since Esther got in there in terms of asking the question about how to measure the impact of these companies and the impact they have on the environment. This was a question that we answered earlier. Congratulations, Esther. You are the first winner today of the Hydroponic Garden. So my colleagues from Money FM will be in touch with you after this session to send that out to you as well. Now, just on the back of that, Sam, we did have another question related to greenwashing that came in, and that is how to be more discerning about the non-legit investments in greenwashing.
Yeah, I think it really is very difficult for an individual who is not a professional investor to be tracking these companies and trying to figure out if they're actually doing the right thing. Things are improving in terms of transparency. I think regulations have kicked in where companies have to provide better disclosure. So disclosure and information and data has to be there first before we can analyze and evaluate. So disclosure is improving a lot, but obviously it's still difficult for an individual to pour through their annual report or their ESG report and then try to figure out all these like complicated financial metrics. So it is important, if you're not a professional investor, to find either a good advisor, like in Dallas, quick plug, or work with a fund manager like the many that we mentioned. There's wonderful products from leading fund managers who have actually done the homework. They've actually been investing in ESG space for decades, for a very long time, even when it wasn't very, in. So I think that, trying to find good fund managers who have a good process in place and who have also a track record, a long-term track record, not some fund that just launched last month that purports to solve everything for you. I think beware of those, but guys who have built up a track record and have a process, it's really important to focus on those as your priorities in allocating capital.
Okay, I've got another question that I want to throw out to our listeners as well, and that is, are you interested to invest in ESG related products? I mean, I'd assume that the majority of you are a yes because you are here listening in, but if no, I'd love to hear why not. What are some of the questions that you've got? So respond in the comments section. Let us know what you need to know. Interestingly enough, Sam, I know that you mentioned this in terms of the Endowus research that you'd conducted, but there was another finding that came out last week, and it really surprised me. It showed that, I think it was Singaporeans, in terms of ESG investing, we ranked lowest in the region when it comes to understanding ESG, but we were one of the highest when it comes to wanting to make a difference, to put our money into sustainable investments. So, as you mentioned earlier in the presentation, it's how do you bridge the two? We've got people that want to invest, but at the same time, they're not doing so. The understanding and the knowledge isn't there. So we've got some lovely questions that have come in as well, and I think that really speak to that. The first one is here, that this answers that wonderfully. It's, where should we put our money in ESG if we have some idle cash as a beginner?
So going to your point.
I mean, don't go straight for Endowus, Sam. Give us a.
No, I'm not. And that's one of my frustrations is that, Rachel, as you clearly pointed out, there is demand, but it's unfortunate that there aren't great channels to, really find out more and implement your ESG investment strategies. And I think it's up to all of us in the financial service sector to do more. Really try to make an effort, innovate if we have to, and solve the problem of helping individual retail investors to access better products so that they can get going. As a beginner, I think if you do research, there are some options out there, and it's important that you need to understand what is your most important priorities. So when it comes to investment, it's great to be driven by your values, but if ESG is not an investable universe in a big way, then you cannot allocate 100% of your assets there. If you find great investment options, then yes, please go ahead. But it really is important to do the basics, which is do a holistic assessment of your personal financial circumstances, what your assets are, what your liabilities are, what you have in your brokerage account versus your CPF account versus your SRS, and really take stock of your financial circumstances. And then the second thing is understand what your risk appetite is, because you might want to do ESG, but it's an active space. There is volatility at times. So understand what this ESG investing is. Is it fixed income, which is much more stable? Or do you want to invest in equities, which over the long term will generate great returns, but has short-term volatility? And you need to be able to understand your risk appetite to balance the portfolio so that you can, if COVID 2020 happens again and markets collapse 30%, you don't panic. That's the worst thing to do, is change your behavior or your investments in the throes of a bear market or volatility. Find a financial plan that works for you, that is appropriate for your risk appetite, and according to your values, allocate a certain asset allocation to ESG, and then find the right appropriate products and solutions to go into those areas. And so if you do a quick search, there aren't too many options. I don't need to plug in the houses.
Another question that's come in as well from Seepak, and he said, how do I start ESG investing? And part of me wonders, there's just been so much conversation around climate change, around ESG and sustainability. I think perhaps it's a bit overwhelming.
Yes, it is. Because it's
where to begin.
Yeah, it's such a big topic, right? So first of all, ESG is so broad. Which one matters most to you? Are you more about the environment? Are you more about the social? Are you more about the governance? What is important to you is the most important thing. Just like when you give to charity, you would not just like blanket and give away to everybody. You would focus on the things that matter to you, personally. It's a very personal thing. And investing should also be a personal thing. It's a personal preference. It's your own personal risk appetite that is, and it's your wealth, your savings, and your financial future that is at stake. So take it very seriously, but focus on the things that matter most to you and hone in on that area. If it's the environment, what aspect of environment are you most worried about? Is it the ocean? Is it, the polar ice melting? Is it, ethnic, minorities that are being targeted? Is that your issue? And try to find out what available options of investing are there. Is it the equities market, investing in great companies that are making a change? Is it the green bonds that are actually investing in infrastructure to reduce climate? Is it governance so that we have better systems in place so that the overall financial ecosystem and the economy does well? So all of these things is all about your own personal preference, and it should always start there. And then you can look at the options out there in public markets, private markets, venture capital, startups. There's a lot of investment opportunities that you can explore to implement that.
We've got an interesting question again from Esther now, and this is, what ESG funds can I invest using my CPF? Sam, I think you can answer this very well.
I'm taking a deep breath again, because if I've said so far there aren't too many options in the cash market, there are even fewer options in the CPF investing space. And that's very unfortunate, because CPF really is our long-term money. It's locked in for a very long period of time. We're actually contributing to it every month, a meaningful chunk of our savings and wealth. And so it is probably the perfect type of money to be investing for ESG. And it's our pension savings, etc. So it's unfortunate that there aren't too many, but there are a few. There are funds from Schroders, Sustainable Equity Fund. If you have religious beliefs, there are Sharia funds from Templeton that are available. And we're working with Mirova to bring the Mirova Sustainable Equity Fund into the system. We're also working with our partner Dimensional, who's a wonderful partner, who are going into CPF in partnership, and they've launched a series of sustainable funds, which will be made available in CPF. And if we have all of those available, we can build, the holistic portfolio across the risk and across multi-asset that we've built for cash and SRS so far, but we couldn't for a CPF because there's few options. But once we get more funds into the CPF system, we can actually achieve better outcomes by having a truly globally diversified and, really important, low cost. Look at the cost of investing, because sometimes the cost outweigh any benefits of investing in these ESG funds. So you have to find a lower cost platform, and you have to find low cost funds, which makes sense because you want better returns, but you don't want to give it all away in the form of fees, which are often not transparent or hidden. So we're really about, trying to reduce cost, be more transparent, and build a holistic, globally diversified portfolio at low cost so that people can have a better chance of success.
Okay, Sam, there's another question here, and I know earlier you tracked the Endow's 100% equity ESG fund with the MSCI, with an MSCI as well. And we've got a question here from Justin, and he asks, what are the biggest risks to ESG investing versus traditional approaches? And I guess on the back of, if they're both tracking in the same trajectory, are there any risks that investors should be aware of?
Yeah, absolutely. And ESG investing traditionally, especially when it was totally focused on governance, and it was mostly what's called negative screening. So we just take out the bad companies and invest in the rest. So, people who sold guns, or, if you're religious, had pork in it, or, weapons and, polluting companies like, coal power plants and stuff, then we just take them out and we just invest in those companies. And that actually didn't work for a long time.
Right.
So because I think it was too narrow, yeah, sorry, I just saw the battery light flash, so I'm a bit panicking here, but I'll find the power source.
We've got 15 minutes to go, Sam. We can do it.
I know, we can do it. But the point here is ESG investing is, if it can track traditional approaches as a globally diversified portfolio and not lose returns, that is the first achievement. And then the second achievement is, if we can find great companies in ESG that will provide better returns than traditional approaches, fantastic. So we're kind of in between those two segments right now, versus where we were, which was negatively tracking the traditional approaches. So it's a tremendous improvement. But I think really our performance of the last 2 years maybe skews things. And this is where I want to provide a warning that, during the COVID environment where technology stocks did fantastically well, a lot of these ESG companies that overlap with technology have done tremendously well, and the performance is great. It's not clear whether that is a sustainable long-term outperformance or whether we'll have mean reversion. But what's important is that we have seen that inflection point. We are seeing better ways to invest in ESG. And as a result, with more money flowing into that sector, we will at least track traditional approaches of investing successes, and then maybe potentially do slightly better. And that's, I think, more than enough for people to place their assets where their values matter the most and make a difference.
People, profit, and planet. Is that it, Sam? Now, yesterday, it's interesting you talk about the outlook for ESG funds. I think the ex-chair of one of the world's largest pension funds actually warned. He said, beware of an ESG bubble. Could it be about to pop? But at the same time, earlier this year, I logged on to a session with the one and only Larry Fink, and he said, if you're not investing in sustainability, you're going to get left behind. So which is it? Are we on the verge of an ESG bubble that's about to pop, or is sustainability and ESG investing here for the long term?
I really think people talking about a bubble is, really too early to talk about a bubble, because we've only just really scratched the surface. We've seen very little assets.
Don't they?
Yeah. I mean, bubble talk is around everywhere all the time. And markets have been, pretty decent in its returns. But people forget we've actually seen sharp drops in markets. Last year, 33%, just 3 years ago, 2018. So 20% plus. So out of the 3 years in the past, 18, 19, 20, 20, we saw 2 years which had massive negative returns during the year. So it's not like it's been plain sailing. And ESG during that period has seen great inflows, but it's a few $1 trillion out of, as I mentioned, hundreds of trillions of dollars out there. And so I think it's very, very early to be talking about a bubble. I would completely disagree with that. Whether we can generate the type of return that we generated last year and the year before, that is a completely different discussion. And that's, we can talk about, technology or crypto or, anything, asset like property prices even, which have gone up quite a lot. So what are you comparing with? It's all a relative game, because with inflation, you're actually seeing prices of everything go up. And so it's, ESG has outperformed, but only very recently. And the amount of money that's gone in is relatively small if you look at the big picture of, financial markets.
So then, Sam, why aren't more people investing in ESG and sustainability linked products and investments? We've got a question here from Jamie, and he's asking, how are the returns on ESG linked investments compared to traditional investing? And I know that you mentioned this during your presentation, but perhaps you can give us another recap.
Yeah, the returns in the past 2 years have been fantastic. So, many funds have outperformed in the double digits versus traditional passive investing options, which are the market returns. Obviously, if you compare them to pure technology or innovation funds, they may have lagged because that sector has done tremendously well. If you compare to crypto, then you massively underperformed, and then recently you've massively outperformed. So once again, it's traditional investing is also a very, very broad definition. So I think that traditional investing, if you're talking about passive index returns of global markets, then it's done better. And I think that if you are thinking, as we shared earlier, about ESG, saying that, look, this is an area where we're looking at the companies that will be the long-term winners for us, then it kind of makes sense that these will continue to deliver good returns sustainably with lower risk. And so versus traditional investing, I think ESG holds its ground quite well.
Great. Now, Sam, earlier we spoke about greenwashing, and I want to find out from you, what are some of the other key terms that you think our listeners, our viewers right now should know about, should understand when it comes to ESG and sustainability investing? What are some of the key things that they need to know to, launch their ESG and sustainability investing trajectory?
Yeah, as I said, I think, educating yourself is really important. First on what you think are the most important things to you in terms of value, your focus area of investment, what risk appetite you have, how much money you have to put aside for ESG is also important. And really trying to define, is it going to be a monthly saving plan or a long-term one-time investment? All those things I think you need to sort out. And then you start looking at the investment opportunities. And, as you said, there's a lot of greenwashing, even in, brands that we trust, like fund managers whose names we know very well and have heard quite a lot of. They have also been, I think, somewhat guilty of some greenwashing in their products. And so it's important for us to do the due diligence, look at what the areas they're investing in, whether the process is clearly defined. So if it's a fixed income product, is it really a climate bond fund? Is it a green bond fund? And then in equities, you need to understand, is it just like any other typical tech fund? Is it just a bunch of names that we're familiar with? Or are they really finding, companies you've never heard of who are actually making a difference in the space of climate or society? So I think it's important to do the due diligence yourself, but also find good advisors or specialists who can do this well.
So Sam, we've got some questions that have come in about green bonds, but before we go into that, perhaps you can tell us what exactly is a green loan? Green bonds, what makes them different? I mean, what is a green loan? What would a company need to put forward for them to apply for a green loan from a bank? What kind of projects do they need to be working on?
Yeah, the green bonds and loans are slightly different because bonds are in the capital market, whereas loans are given out by financial institutions like banks or International, Bank of Reconstruction and Development, which is often known as the World Bank, and the European EBRD and other institutions. And they're somewhat state, contributed institutions that provide loans specific for infrastructure and green projects. But green bonds is regulated by, the regulators in each country. In Europe, it's been the most advanced market where they have clear definitions of what a green bond is. And it has to have a meaningful impact in the environment. It has to be specific targets that has to be measured and also updated and reported so that people can meet that, look at it and continue to measure it and monitor it. If you fall behind or do not, then it may not be given that green bond designation. So when you see a green bond designation, then it actually does mean that it is legitimate and it's reliable. But it's been a very small area of fixed income. But I think this year in the first half, we saw green bond issuances overtake traditional bond issuances in the infrastructure space, especially for utilities, which is a tremendous achievement. And so these are traditional renewable energies like solar, wind, power, and things that we can easily understand. And so those green bonds in particular have been exceptional opportunities to invest in.
So I've got a question for you then, Sam. I mean, you spoke during your presentation about the PRI, the Principles for Responsible Investing. For viewers and listeners that want to invest in a company, they want to look at their sustainability report, because in Singapore, majority of listed companies are issuing sustainability reports now along with their annual reports as well. What should investors be looking out for? We understand how it's regulated here in Singapore, but what are some of the other things that they need to understand on a regulatory basis in terms of sustainable investing? What are some of the key things that they can be mindful of to, avoid those greenwashers and the rest of it?
Yeah, it's I think really important. Sorry, Rachel, I'm very conscious about the power. I'm getting very distracted. But if you lose me, then I'll log back on. But yeah, I think it's really important that companies improve their transparency and disclosure, first of all. And it is improving, especially here in Singapore. It's fantastic to see. It's very difficult to process and understand the reports. A lot of big numbers are thrown out, but not well clearly defined again. So definition still becomes an issue. But I think it's a great place to start to understand the company and what their values are, what their priorities are, and what they're actually doing in this space of sustainability. So great place to start, but I think that it's not enough. We have to find measurable financial impact. As an investor, especially trying to generate good returns, those fancy sustainable reports in fancy glossy paper is not the answer to better returns. So it's important for the financial investors to do their due diligence and examine the data and the measurable numbers in financial statements and other data that the companies provide and disclose.
Okay, Sam, before your computer runs out of juice, are there any parting words or final messages that you'd like to share with those listening in?
Yes, I mean, thank you for this opportunity and looking forward to the session next week. But first of all, I would say that this is the biggest mega trend in financial investments. It's not just a passing fad, although it seems like it. Many things start this way and become a really meaningful movement and a change agent. And more than anything else, I think in this time of major dislocations in the economy and financial markets and increasing disparity of income and wealth and inequality, it's even more important for everybody as individuals, as groups and society to be better stewards of our resources and our capital. So I think it's upon all of us to, really take on that responsibility to enhance outcomes for all of us, for the next generation, better protection of the environment. And in so doing, we can all benefit from it as well by generating better returns so that our financial future can be secure. So really encourage everybody to do more research, be more interested, get more involved in anything that's going on, and look forward to seeing everybody next week too.
Thanks, Sam. And just in response to the last question we posted on, would you want to or are you interested in investing in ESG related products? Everybody said yes. Everybody said yes, and everybody said that they are that they think that they can get a better return on an ESG related product. So it's interesting to hear this from everyone that's been dialing in today. Thank you all for sharing all of those responses with us today. I just want to have a look at the question that we'll put for the final winner for today, Sam, and I'm going to award it to Serene Ung for her question: where should we put our money in ESG if we have some idle cash as a beginner? Because that is really what this session is all about. And it may seem like the most fundamental question, but it's such a critical question to understand. There is just such a mountain of information out there when it comes to ESG investing. As an investor, it can be quite easy to be overwhelmed with all of the content that is being put out across multiple platforms, not only in mainstream media, but social media as well. So congratulations, Serene. The team will be in touch. Now, thank you everyone for your questions as well. If we haven't gotten around to answering them, please bear with us. We will do our best to respond to you on Facebook. Thank you again, everyone, for joining us during your lunch break. We hope you've had something tasty while you've been listening in. I know me and Sam are probably going to grab a bite after this, but first, just a reminder, as Sam mentioned, next Wednesday, a little bit earlier, from 11 a.m. until noon, we have part 2. It's called Ready to Grow Your Green by Going Green, how to invest in ESG. So today, Sam has shared with us all of the basics of ESG investing. We've really covered the 101. We've talked about greenwashing. We've talked about trends. We've talked about how ESG related funds have been tracking. In the next session, we're going to talk about how to invest in ESG and sustainability. We're going to be taking a closer look at different ESG funds. We're going to help you to understand the breakdown. We're going to walk you through the wider industry. We'll also be giving away another 2 sets. So we've got 2 more to give away, 2 more hydroponic mini gardens, so you can grow your own green things at home while learning about how to grow your green and invest in green products. We're also going to be joined, so Sam will be coming back. Thank you so much, Sam, for joining us again next week. Sam will also be joined by Serene Ban, who's the CEO of Singapore and Southeast Asia at JP Morgan Asset Management, as well as, who else do we have next week?
Really?
We have Lily Cho will be joining us as well. So thank you everyone for joining us today. Lily Cho, by the way, she's the Singapore CEO and head of institutional for Asia Pacific at Schroders. So we've got some real heavyweight guests joining us next week, Sam, yourself included, of course. But thank
and
you.
we do not
everyone.
plug on the gender diversity and representation. 3 ladies. I'm being overwhelmed.
You're outnumbered. Did they say the thorn among the roses? Is that? Just kidding. Just
Take
kidding.
that, I'll take that.
I'm probably
I'll work as a thorn next week.
Oh my goodness. Anyway, thank you everyone for joining us today. We hope you've enjoyed this session. If you do have any questions before we get rolling next week, feel free to reach out to us on the Money FM Facebook page. But have a wonderful Wednesday. And don't forget, you can tune into Eco Money tonight at 6:15 p.m. on primetime for more green investing trends and stories. Thank you, everyone. And thank you again, Sam, for being so engaging today and so informative.
Thank you so much, Rachel. It was wonderful to be here.
Thank
Thanks,
you.
everybody.
Thanks.